Welcome to TradeTheMBI.com. This is John. This report is for the 11th of April, and well, you can see it there after our nice discussion of the cyans. We were very concerned about the readings that developed right here, and I told you that based on what we had seen before. In fact, I posted a chart. Let me mark it real quick. Last time we had this similar kind of setup where we were getting close to the cross, and we didn't. It was right about there. And then we repeated the same move right here. And once it gets going, and like I said, once it would start, it was a good opportunity on any move up to buy puts. And boy, I said then we would take out the lows, and we did exactly that. So pretty clear when these kinds of very specific setup failures take place. It was also interesting too that we ended up with the attempted cross of the steel above the sign and then move literally right below it. Whenever you get these crosses where you're going to the upside, I kind of call them a false crossover, because normally that's intended to be bullish, but it really never developed into the bullish configuration. And then boom, once the collapse took place, you finished below. And like I said before, we're still within that down move anyway, because it's going to take some movement to get the red and white turning around and moving back to the upside over this. So while you're going to get the gloom and doom projections, just take a look at your extreme histogram. This is not all that horrible here, because it is massive down day and you didn't even dip below the cyan. That's an indication that there's still plenty of internal strength in this. So don't be getting into that group that thinks that the market is going to zero. I think I even saw someone go, oh, the post, this, that, and the other, you're going to have an 87 style crash, yada, yada, yada. It's all stupid stuff. Don't listen to it. You waste your time. Likely to see a little bit of an upprint, and a lot of times this just gets consolidation within that. But that is worth looking at, because I think intraday you could see a decent little pop off this. NQ, likewise, still bearish within that configuration. So no help there. Likely to just see some consolidation. Usually takes a day or two after an event like that, and particularly with this being a Friday. Not really looking for a ton of excitement, so to speak, especially when you have a near 40 down move, and then you closed at the minus 30 some, and you're going to bounce a little from there, but you're probably going to come back and revisit these low areas as they test. At least the algorithms are going to want to test what kind of supply now is set below this marker. That's usually how they work it. So you can see, interesting from the YM standpoint, a little bit more bullish, because higher peaks, you're starting out with a higher click there. You've retested the low now, and you have a higher extreme histogram. So the potential for the YM to do better, definitely there. So looking at your Dow stock should probably be a little more advantageous. In fact, why don't we do that while we're here? Let's go to the radar screen, and there's the Dow. And like we've talked about, when you get super one color, you're likely to flip back to the other color. This is not 100% all red, but gosh, it's turned close. Gives you a pretty clear idea that perhaps things have gone just a little more than they need to. It doesn't mean that we're oversold, because, and those are tough items when people talk about oversold and overbought, because the metric that they use to determine that is usually based off of oscillators, RSIs. I mean, look at all these sell signals for the NASDAQ. My God, you can see how ugly that potential is. And those aren't very helpful, because what they don't understand is the supply and demand aspect of oversold and overbought. They just use arbitrary measure that says, oh yeah, you've reached a certain point and therefore you're oversold. Well, no, because it doesn't really work that way in the real world. And this is what we try to take into account with the extreme histogram, in that you could have a very tiny up move coming up here and get overbought, simply because there's too much supply on the upside to push through, and it monitors that. And this is some of the failings that I think you see on the contemporary popular oscillators, and then just because times have changed. That's all it is. A lot of sell signals within that. Still a few buys, but you can always go through those readings and look at your favorite stocks. USO, from its little yellow buy right there, a little pivot down, but it had been making these. See, this is the same higher pivot we're talking about on the YM, and you just need it to cross over, and it just escalates nicely from there. It also helps to have the cyan come down, and you confirm to cross over to the buy side. So not a bad one for USO. Gold, still within the buy configuration within that setup. Once it crossed over here, and still rising red and white. So from that standpoint, still okay, not horrible. Likewise, though, we had a little bit of a different feel from SLV where it produced the buy and then it flipped back to the sell signal and potentially could make another spider back to the upside where it crosses over. You've had a continuation of that, but you kind of went flat here. So silver not really trading outside the range. I mean, we literally, you can put our lows right there, and we've been right between this 1940, 1885 for quite some time within there, even though you've had this steady building of the DOC red and white improving. And the problem with that is that you get to a point where you're up here at the zero level or whatever, and you haven't moved anywhere. And then when it turns down, where do you think it's going? Yeah, you're going to make new lows. It's exactly where they end up going. 50K setup, we talked about this one, particularly on our Skype chat with members. The magenta came in right at the start of the day, and I explained that typically, it takes about 2 bars for that to kick into effect. It's very early, and what you're looking for at this particular point is you've got the start of a DOC, tends to give back a little bit, and then you're looking for the next move where you cross above and it formed the perfect spider within that 2 bars. And well, the cascade, you know exactly what that looked like. From this 50K reading, it looks like we should still continue to retrace. I mean, when you get this separation, I've talked about this tons of times, like right over here, when that steel and cyan are separated like this from the algorithmic standpoint, you have a disparity between buyers and sellers, and that sellers are far stronger and more consistent in their action. And I'll liken it to not afraid to attack depressed prices. A lot of times what you'll get a down move, and you'll see cyan moving below green and things like that, simply because short sellers are covering their positions and doing so on a regular basis. We can look at the intraday real quick. Oh, you know what? Let's go over some of the alert stocks. Here we go with Apple. You don't normally see these from the daily standpoint. You just see the intradays for those that don't have the indicators, so it's worthwhile taking a look at some of them. Still been in a sell signal, red going there. You have the slight pivot, but we expect that low to be retraced because of the dip down here below the red line, and likewise has not moved over there. What is that low anyway? I think we talked about it before. Get the number on there for you. 518.70. Go to Amazon. And a lot of these were pretty interesting because they really reflected well from the daily charts here. And again, when you see this, if I remove this paint bar, you see the deep red. And this will become the algorithms that are used coming up, but just working on the conditions to remove them when we get the green crossover in that. But it lets you know that you're in a deep downturn and that the lows are likely to be revisited. Now, interesting that it moves out of it a lot of times when you've reached your low point. So that's always interesting to see that happen. And then we just can go right back in here and add the paint bar back in. And so in other words, you would never have seen the daily buy here or these green bars simply because that deep red lets you know that this isn't going to survive. That's the easiest way to describe it. And effective on the 15-minute chart once that's put into place, it'll be very clear. Google had one of the better charts overall with the rising red, green, and so still possesses the best potential, unfortunately. And he pulled a nice little spider there, and it developed pretty quick intraday. We knew we were overbought here with the yellow developing in the extreme, but that could still continue for a little bit more. So it was that early 15-minute warning, and then it just cascaded with the market. Not a whole lot you can do there. Netflix has just been in a constant short, and again, This makes it really easy when you do this here, because you can see, look at that deep red, no buy signals within that setup at all. And the expectation is with this separation that you're still going to continue to suffer continued declines even on any buy signals. And so it's important to look at when you are trading the intraday charts, that bias exists to the downside. And we'll go to PCLN. Love this one. We've been expecting it to retest its lows as usual. Nice run. You can see all the red. Now, it got out of its red right about here. Expected the lows to be retested for the dip down here. Came down, produced a nice little pop, and the problem was, again, you see the spread. And so this is where that 15-minute sell signals became very powerful. It was very nice. Tesla, another good one to put on here. Again, short spread started to develop and just got bigger, and you just flatline along here. So if you don't get this momentum going, you just typically expect sideways to weak action. No surprise on the lows being retested. That's not a big deal. It was the crossover that took place a couple days earlier, moving along that spot. Twitter, likewise, has been ugly. Now you can see, produced it on the early paint bar, but you can see the dark red would have appeared here, and this would have just stayed short all the way through. And it becomes very attractive when you look at it like that, because you just click that off, and there it is, straight downhill. I'll go to Baidu. And there you go. You saw that one move down, and Baidu is actually in pretty good shape. I mean, despite the fact that you had the dip, that's still a very viable setup. Overall, you just need the green to pivot up, and any decline here in the cyan would become very attractive. So I would be looking for long setups when they pop in on the 15-minute alerts with that. FAS was pretty ugly. Boom. No surprise there. I mean, that's clearly within the chart's been in a sell signal for quite an exacerbated amount of time. Put the other paint bar back on as well. You can see from there, red. We'll look at Facebook too. Facebook has not been bad. We added LinkedIn and Green Mountain Coffee, so those were actually interesting ones. They started short right away. I had forgot to turn the alert on them, and then put it on just in time, posted the chart so you would all see the short setup that was there. But it was pretty clean. Facebook actually looks very nice. Little pivot lower here, and the cyan moving back. That's excellent from the red. Just got overbought. And even on the decline, you can see that it still didn't release the overbought situation. And what is that telling you? It just tells you there's a whole lot more supply to the downside as far as sellers. Not necessarily downside just means sellers. You don't know if their bias is to the short side or not. But there was plenty of it to the point where it was overwhelming buyers, meaning that it's still overbought, in the sense that if you have that much supply that's willing to sell, you've got a problem. So that was that. Let's flip over to the intraday look real quick on the ES. Okay, so this is an ES that you're not necessarily used to looking at. This is the latest adaptation within the paint bars that will reflect the broader circumstance of the market condition. And what it's taking into account is this separation that you see here in the blue area. And you can see from our early setup within the day, we got shorts early on, and then we had a secondary one as the market started, from what we talked about the other day. And there you see the cascade. A little bit later in the day, it finally did clear itself briefly, and then we started a new cycle, which this was a brilliant short we were able to take advantage of as soon as the steel came down below, and you also had the crossover. It was perfect. Market cascaded lower, and subsequently towards the end of the day, brief little pop, but again, we knew it wasn't going to survive as that steel came down to give the sell signal, and we started to roll over with the red, and it just came back down to the lows. Nothing special. You can see here now making the higher move. We still have a retest visit for the lows based on the dip right here. But you can see been rising good, and actually this nice little burst is coming at divergence, so that actually could be a shortable move as this spikes up here with the cyan rising. So it'll be interesting to see if that bar closes like this right as it's being made. But we can increase the size of this chart now. A little bit larger candles gives you a better view. So you get these kind of spikes at a point where you can see that shorts are becoming more active within it, and so it's one of those classic setups where pump price so that you can get a better entry to the short side to attack it to move lower. So long enough. We'll talk again for the beginning of the week. As always, though, to look for me on StockTwit's private Twitter feed, and those obviously on the Skype chat. If you're a full member and you want to be on the Skype chat, you can always just drop us an email, and I will let you come into the chat. You're not necessarily going to have the screens in that, but those that are interested in understanding how these algorithms work for the intraday, nice place to be to get a little bit extra insight into the nuances of some of these moves, or simply enough just following the colors as they go. As always, trade well.